Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the US and Europe's trade disagreements and most importantly about the crucial US tariff decision on EU cars and the potential trading opportunities that have and will come about as a result. My name is Sasha and I'm a financial analyst from the research department at 4Trade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here's an example of a market opportunity. Here you can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro will decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the situation in Italy, which has affected the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the left-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's how you decided to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, then you could potentially have a loss of this amount at these resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So, a brief history of US-EU conflict. When Donald Trump was elected US president, he expressed a desire to break away from existing US policies. While Trump has spent years verbally attacking China for taking US jobs and intellectual property, he has also stated that the US would adopt a new policy of America first. President Trump believes that the US trading partners have been taking advantage of America. While China is clearly enemy number one, Trump has also accused the EU of currency manipulation, of robbing the US, and treating it like a piggy bank, as he stated in 2018. After granting a temporary extension in 2018, the Trump administration imposed steel and aluminium tariffs on the EU, which became effective at the end of May 2018. The EU retaliated in June of that year with $3 billion worth of tariffs on US goods. Why is the conflict important? Well, according to the World Bank, by GDP, the EU, the second largest economy in the world, and the US is the largest economy in the world. A deepening trade conflict between the two blocs would have a knock-on impact upon the global economy, which could perhaps cause even worse consequences than the current China-US trade war. However, the EU economy has been weak in recent years, so has suffered more from trade tensions, and it can't afford more tariffs on its key industry. On the other hand, many have advised Donald Trump that it's not a good idea to fight the EU, China, and other countries it has trade disagreements with at this same time, because eventually the US economy will face heavy economic damage. So, what instruments have been affected thus far? The main instruments affected by this issue are stocks in the GERD or the DAX, the stock market of Germany. Three of its largest components, Daimler, BMW and Volkswagen, are all directly affected by US threats to impose tariffs on their products to the huge US market. Obviously, we can't say the decline in the German index is just due to the threat of auto tariffs. The Eurozone and German economy has slowed and is stagnating, and at the moment isn't showing any signs of turning around. But the DAX, or the GERD, has moved directly according to US statements on tariffs upon the Euro car industry. So let's provide the latest example. From a trading perspective, the two main instruments affected have been the German stock market, the GER or DAX, and the euro. So let's take a look at the GER first. You can see here how when news of calming trade tensions and rumours that the US was open to other solutions on EU car tariffs, how the GER boosted the index. Since October the 14th, the DAX has jumped 4.64%. And since October 22nd, when the US Commerce Secretary confirmed the US was considering alternatives to trade tariffs on the EU, the index climbed 2.44%. As the index has had little positive economic data to celebrate, all analysts have remarked on the connection of car tariffs to the GER's recent rise, with Volkswagen, Daimler and BMW among the companies that have jumped the most over the past few weeks. The euro has also been positively impacted by these trade developments. Since October the 14th, the euro-dollar currency pair has climbed 1.22%. While it's true that the dollar has traded lower in recent weeks, mostly due to the Fed cutting interest rates, the euro has still climbed against a basket of other currencies. The most recent statement by the US on this topic was taken as positive by the markets. The US announced on November the 4th that the US may not need to impose auto tariffs on the EU by November the 14th. US Commerce Secretary Ross hinted that even if there is no wider agreement between the US and EU on trade issues before then, that the US could decide to suspend the auto tariffs again if progress is being made. So with the clock drawing down to November the 14th, as already stated, things look optimistic as far as investors are concerned. The US is considering other options, and the EU and Germany in particular wants to avoid car tariffs at all costs. While it's impossible to predict the outcome, if new tariffs are avoided and trade tensions between the US and China continue to be positive, investors would hope that the GER would continue to climb and that some much-needed support for the euro will be provided. But if tariffs are imposed, analysts think it's likely that German stocks would decline and that the euro would continue to face pressure, as the Eurozone economy desperately needs a boost in the absence of positive economic data. Well, I hope you found this webinar useful. Of course, at 4Trade, we will be following developments related to the crucial US tariff decision on EU cars. And we expect a very busy week's trading. So please do get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at 4Trade again soon.